Historically, over the last 40 years, anybody looking to kind of invest in the Toronto market can expect around a 6.73% kind of average appreciation year over year. The rental market has improved drastically, especially over the last 60 days. I'm starting to see like bidding wars come back. The rental market was suppressed for a very, very, very long time, but we're really starting to see it come back. The most interesting data point here, I think, is the semi pullback, because 4.5% is quite a bit. Like if we were seeing 4.5% month over month on a bullish run, that's a pretty big number. So if you're looking at buying and you want a comfortable buying experience and you're going to be buying by the end of the year, I would strongly urge you to consider buying in the next couple of months while people do have their eye just elsewhere.
What is up, YouTube? Matt McKeever here, and we're back with Emma Pace, and we're talking about the Toronto real estate market. Hey, Emma, how's it going?
Doing well, Matt. How are you?
Doing well myself, and really excited to hear what's going on in the Toronto market because, you know, I talk to a lot of realtors these days about a lot of different markets, and it seems like we're starting to hear some mixed messages coming from different markets depending upon where you are. Some markets seem to still just be on fire. Others are catching their breath. Some are even starting to see maybe a pullback in demand as we come into the summer. So what's going on in Toronto?
So I think we are catching our breath a little bit for sure. I am seeing a slight pullback right now, which, you know, if I'm being honest, I think is probably a little bit of good news because I think we were a little bit overheated at the beginning of the year. But I also think kind of as we dive into the data, it becomes a little bit more apparent that this is kind of like a seasonal thing. I guess I was a little bit confused as to what was going to happen this summer because, you know, nobody had any idea of what the reopening procedures were going to look like and that kind of thing. But what I've seen on my end, at least to start, is people just being less focused on real estate. Like people want to go and hit the patios up, and they've been so focused on real estate because we've been locked down for so long that they're like, hey, I just need to take a step back for a minute, enjoy my life again, and you know, after the summer, we can kind of revisit this. So I think that's kind of what we're seeing. I'm starting to see that kind of in the data as it comes out as well. But I also think that provides a good area of opportunity for anybody that's still hungry to get a deal, because a lot of people are kind of taking their eye off the ball right now. And I think there's a lot of areas of opportunity for people to find great deals in the market right now.
Awesome. Yeah, really appreciate you kind of giving us the context. And I know you always come with a great presentation, so let's jump into it.
Yeah, absolutely. So we'll go through kind of some year over year and month over month market performance statistics to start. If you look kind of June versus May, condos have been flat. If we look at last month, we actually saw a bit of a pullback in condo prices and condo townhouses when semis and detached were still up quite a bit month over month. So we've seen that revert a little bit this month, where condos are just kind of flat across the board. So the average price being $717 versus $716. So, you know, not much of a difference there for $1,000. It's actually closer to 500 if we look at the dollars and cents there. Condo townhouses, you know, we're hovering kind of around that 813 average price point versus kind of 801 last month. And then semis is actually where we saw the biggest pullback month over month. So we were at just over we were just at kind of like 1.326 there, and we're down to 1.267. So we actually saw a pretty decent pullback month over month in semis. And then, you know, detached, we were just over 1.7 and we've come to just under 1.7. So we've pulled back about 1%. So for me, you know, looking at this data, if I see 0, 1.5 or 1, like for me, that's flat. You know what I mean?
Yeah.
Up or down 1% is okay. But the most interesting data point here, I think, is the semi pullback, because 4.5% is quite a bit. Like if we were seeing 4.5% month over month on a bullish run, that's a pretty big number. So this is definitely going to be the one that I'm looking at pretty heavily going forward. But we've seen semis do really, really, really well over the last year. So to see a bit of a pullback in that segment, I guess I'm not overly surprised.
Gotcha. And then I guess just chatting through all this, it's a newer development, but are you seeing a reflection in this, like in regards to approaching negotiations or dealing with offer presentations and things of that nature?
Yeah, so I think across the board, we've definitely seen a little bit of a pullback in regards to overall total number of offers. Now that's for sales. We're going to see the opposite in rentals, which is good news for the rental market because it's starting to come back a little bit. But thinking about our particular clients and the offers that we've put in kind of in the last 30 days, the bulk of them, we were the only offers. So we did have the opportunity to negotiate. A lot of the offers that we've put in recently have been conditional, right? With the opportunity to either have a couple of days on the financing or a couple of days to review, to do a home inspection or review the status certificate. I think there has been a little bit of expectation leveling when it comes to sellers as well. I'm seeing a little bit more seller motivation. Now, when we look at months of inventory, we'll still see like we're in a seller's market. We still are. But I do think that there are the people who have purchased already, and there are some motivation, or there is some motivation behind their sales strategy in terms of making sure that they get their current property under contract before the next one closes. So there's definitely deals in that regard. But from a buying experience, when you and I started doing these videos, the market had cooled quite a bit. And I said, this is the type of market that everybody has been asking me for so long. Mm-hmm. And we're starting to get, or we are back at that point where now it's like, hey, beginning of the year when you told me the market was way too hot, I didn't want to participate. This is your area of opportunity. Like I said at the beginning, people are taking their eyes off the prize. If you want a more comfortable buying experience with conditions, maybe getting like a second walkthrough on a property, which isn't that common. It's normally like, hey, see it once for 20 minutes, put in the offer. I've had a couple of clients who've been able to go back multiple times and bring their family back and stuff like that. So it's just a little bit more comfortable, especially when you're investing, this much money into something. If you're looking at buying and you want a comfortable buying experience and you're going to be buying by the end of the year, I would strongly urge you to consider buying in the next couple of months while people do have their eye just elsewhere.
Yeah, really appreciate the perspective. And it's always interesting to hear just how it impacts the day-to-day negotiations. Yeah, for sure. So, this is a number that we look at every month, which is just total number of home sales. Of course, the last couple of months have been crazy because we were kind of in this slump here. But I think we'll probably continue to see this level off. We're obviously still pretty high on a year-over-year sales perspective. But as we continue to move forward, I suspect that we'll probably start to see this level off a little bit. And then just to give a little bit of a different visual perspective in year-over-year changes for pricing, if we're looking at June, the only thing that has pulled back year-over-year in pricing has been semis so far. So this is, again, why I really harp on looking at the month-over-month numbers, because at the beginning of the year, if we looked at condos, they would have been way down here, right? And semis would have been way up here. So I don't necessarily think that this year-over-year graph does give the best visual representation. I do like to look at it, but I do think that if you're active in the market, you should be tracking what's going on monthly, not necessarily year over year, because I do find that this can skew, just when you're looking at the data, can kind of skew your opinion of it a little bit. Mm-hmm. Now, if we're looking at important metrics, which we do every month, my main one, which is months of inventory, we've seen months of inventory stay relatively flat over the last couple of months. Last month we did see a little bit of a hike for condo, townhouse, and apartment inventory. And as a result of that, we did see a bit of a pullback in terms of pricing. Now, if we look at, May versus June here, they're pretty much the same. And I think that we're getting the same feeling that the overall pricing has been relatively flat. So, it's a little bit interesting to see that with the semi pullback in pricing that we didn't see a little bit more in terms of inventory. So that was a bit surprising to me, but everything else has been, pretty much the same month over month. And I think we're seeing that reflecting in pricing as well. Yeah, and obviously just kind of chatting out loud about this, but even though we're maybe seeing from a pricing standpoint the market catching its breath, overall there's still very little inventory across the board, it seems like. Yeah, I mean, under 4 months is a seller's market. We're well under 4 months. The good news is, a couple of months ago, everything was under 1 month. And to me, that's an indicator that we are an extreme seller's market. So to see a little bit of easing
towards the right side of this graph is more of a comfortable feeling. Now, again, we are still in a seller's market. Okay, if we look at this graph, we're still in a decent seller's market, but I wouldn't say that we're in an extreme seller's market or as extreme as we were earlier this year. So, you know, I definitely think there's some buyer opportunity right now. But when we look at the seasonal trends, we'll notice that, you know, typically fall, so right after Labor Day, is usually when we see kind of the next uptick in activity. So I do think there's a good area of opportunity for the next kind of 60-ish days for any buyers who are looking to get something under contract. All right, and then just again going through kind of month over month pricing. So typically what we'll notice if we look at this trend is 80% of the time prices do, and this is over the last 19 years, 80% of the time prices do actually decrease from May until June. And again, that's usually because the summer tends to be a little bit slower than spring market. So we do usually see a little bit of a pullback if we're looking at average May pricing versus June, and you can kind of see that percentage change here. And most pullbacks are kind of between 1.6 and 2.8% of just the average price point, okay? What is really interesting to me looking at this is that 90% of the time, the year-over-year numbers have increased. There's only been 2 times in the last 19 years. So 90% of the time we're seeing this, you know, May, you know, up, and same with June. We've seen 2 times on this graph. So just after 2008, which is obviously when we saw the financial crisis, and then just after 2017, which is when we saw that fairly big pullback just as a result of government intervention with the real estate market, is when we actually saw a year-over-year pullback in May. But we still saw upward movement in June, which is a little bit interesting when you look at this graph. So I think when we look at this, it is something that does support the time in the market instead of timing the market argument, because I can envision that there are going to be some people that are watching this video that go, well, I should just wait until next June. Did I miss the mark, right? Yeah. But I think historically, if you look back and you go, okay, well, should I have just waited until June? Yeah, maybe you saved 10K here or whatever. But, you know, you almost make 100K year over year. So timing the market really is more important than trying to time the market on a month over month. If you find a great deal, then you should just buy it.
Yeah, appreciate you breaking it down and just showing such a depth of information here as well, right? Being able to look at the last 2 decades and just see how that's stacked up is interesting.
Yeah, so look, like I said, historically going into the summer months, we do see a little bit of a pullback. But again, it really depends on what you're looking for. If you're an investor and you're looking for a deal, then wait until you find a deal. But if you're somebody that's looking for your forever home that you're going to live in with your family and this is the perfect spot, I wouldn't necessarily try and save 10K and get your family a house that you don't love nearly as much kind of thing, right? So you do have to take your personal situation and what the end goal of this property purchase is into perspective when you're looking at this data as well.
Yeah, absolutely.
All right. So, and then again, this is just a good representation. This is actually something that I got from Tom Story. So shout out to Tom. He's another condo agent downtown that does very, very well. But if we look historically, so this is the, this graph will show us the average appreciation kind of year over year on a percentage basis. That's what's showing over here. And then this is, of course, the time frame. So on average, if we look here, which is the dotted line, since 1980, so over the last 40 years in the Toronto real estate market, we have seen on average 6.73% appreciation across the board if we average all of this out. But I think what's really important to understand is when we see these pullbacks here, so below this 0%, meaning that prices declined, again, going back here, that's why I really highlighted it to show on the graph perspective as well when those pullbacks occurred. Right, so interesting to kind of see what's going to happen going forward. But historically, over the last 40 years, anybody looking to kind of invest in the Toronto market can expect around 6.73% kind of average appreciation year over year. And then a little bit of a condo market update. So last month I broke this down to just give a more visual representation of where condo sales are happening in Toronto. And so we had just over 1,900 condo sales that happened in June. Last month was just under 1,900, so we were up about 1% in overall sales. But if you look here, we had about 370 sales in the west end of Toronto, which is highlighted in yellow here. Toronto Central, we had 1,200, so obviously the lion's share of the transactions are happening down here, which is the downtown core, and then east. Now, it's important to see the price disparity for anybody that's actually looking to get into the condo market. Obviously, downtown and central is going to be most expensive, but if you want to get into a more entry-level price point and still be on main artery for transit to get downtown, then the east is a great option because you could be up near Scarborough Town Center and be able to get to the downtown core when things kind of reopen within 20 or 25 minutes, for 75% of the price kind of thing.
Yeah, it's interesting to see that breakdown. And so I guess when looking at these areas, maybe on a more granular scale, on that east side of Toronto, is there particular pockets that stand out, Emma?
For me specifically, it would be along the Shepherd line. I think that's where the value really lies right now because everybody I don't want to say everybody, but the bulk of condo buyers that I speak with or people who are looking to enter the condo market want to be close to transit. That is one of the key drivers. I want to be able to get downtown within 30 minutes. So to me, I really think the value is along the Shepherd line because, like I said, it is a direct artery to be able to get downtown relatively quickly. You've obviously got the GO station and stuff out there as well, but if we're looking at TTC forms of transit, then I do think that that's kind of the area of opportunity on the east. Now, what I also think is interesting is if we break down, so these are the condo apartment sales for June for various regions. And so what I tried to do was highlight in each of these different regions, places that actually had volume. Because I think that if you don't have enough volume, it's really hard to understand what the data looks like. And so what I did was in each of these different regions, so Halton, Peel, Toronto, and then York, I highlighted the areas that actually do have the most volume for condo transactions, okay? And want to give a shout out to Jordan from Pre-Condo because he did a video on a similar topic. And so if anybody's interested in pre-construction, I would definitely recommend checking out his video there. But if we look here, we go, okay, well, we just talked about the average pricing for condo in west, central, and east, right? Being 572 in the east, 770 central, and then 650 west. Okay, well, is there headroom for condo price growth downtown? I know there's going to be a bunch of people out there that say, okay, well, condo prices are already overinflated and blah, blah, blah. But if we look at this and take it into perspective of other areas with condo sales, I actually think there is good headroom for Toronto, like growth for Toronto, because if we look, we had almost the exact same amount of volume in Toronto East as we did in Mississauga. Mississauga actually outperformed for total number of sales for condos. And the price point is actually higher in Mississauga slightly, like they're pretty much the same, right? But it's important to say, okay, well, would you rather buy in Toronto on subway line for the same price, or would you rather buy in Mississauga? And that's maybe a personal preference, or you know what I mean? There's arguments, I guess, to be made on either side. But if we look, even Oakville condos, obviously there isn't as much volume in Oakville because there just isn't as many condos. There aren't as many condos. But, average price for an Oakville condo is getting pretty darn close to downtown Toronto right now.
That is interesting to see, yeah.
Right? So, and then if we look at, okay, so Toronto West, and this would obviously include Mimico, which is a really, really big hotspot for condos downtown, we see that Burlington is higher than that right now. Markham is slightly higher than that, we'll say is equivalent, and Vaughan is also higher than that. So it's really interesting to see this because we obviously saw a pretty big pullback in condo prices with the pandemic, but we obviously saw these areas of kind of the suburbs and the GTA and stuff like that see a massive run up in pricing. And so there really isn't that much disparity between Toronto condo pricing and other areas of the GTA in terms of volume. So I think it's really important to put this into perspective, because when you just say 770 is an insane price for condos, sure, that might be true in some regards, but when we put this into perspective with what's actually happening in other locations, it actually doesn't seem that crazy. It actually seems a bit undervalued.
Yeah, really appreciate the context, because certainly once you paint that picture, it doesn't seem out of place by any stretch.
Yeah. So if we look, so I pulled two specific condos. This one is in Mississauga, and this one is at Main and Danforth, which is right on the subway line, and is probably within 10 minutes for somebody to get to, like an amazing location for restaurants, bars, all of that kind of stuff, right? And so if we look here, this was on the market for 7 days. This was on the market for 10 days. They both have the same square footage, 7 to 799. The maintenance fees are the same. Like, I tried to keep all of the data as close as I possibly could here. So they both have parking. They both have locker, 2 beds, 2 baths. This one is in Toronto, and to get to Union Station takes 24 minutes. Okay. This one is in Mississauga. To get to Union Station takes twice as long. So double the commute time, which is really one of the big drivers for a lot of people who do purchase condos. Okay. They sold within $9,000 of each other, within 1 month of each other, right? So I think it's really interesting for people to say, okay, there might be something here when it comes to Toronto condos, because again, similar to the argument that we've talked about previously about the gap of detached pricing to condo pricing. Yeah, we're also kind of seeing that where it goes, okay, well, are condos in the GTA outside of Toronto overpriced, and are they going to come down to go back to kind of that median spread and gap of what it should be? Or does this leave a runway for pricing for Toronto condos to move upwards? So it's kind of interesting to see, but I do think looking at the data in this regard, it does show that there is some area of opportunity for Toronto condos.
Yeah, and really appreciate you breaking it down this way and just like having the apples to apples comparison.
Yeah, for sure. So anybody that's interested in talking condos, of course, that's my specialty. We'd love to chat with anybody about this, but I hope it does provide a little bit more context as to what's actually happening in the market. And then just a quick luxury condo market update. Last month we had about 31, so we've seen a pretty big drop off in total number of luxury condo sales. So we've seen sold properties go down. Total number of new listings have gone down quite a bit. The average sale price is down. We were over, I think we were about 2.1 last month. Now, with that being said, this data is pulling everything that's sold above 1.5 million. We also know that the bulk of sales that happen do happen between 1.5 and 2 million. So if we start to see these numbers go down, I'm going to assume that the average sale price is going to go down, because we know that the bulk of these 18 are trading between that 1.5 and 2 anyways. We just don't have as many sales above the 2 million to kind of pull that price point up. Days on market is up 12%. So, we saw this about 24, it's actually probably slightly under 12. I screwed the number up here. But we're starting to see the days on market a little bit longer. So not a massive softening in the luxury market, but important to kind of look at, because we saw last month that the luxury market really did outperform the overall condo market just in general. If we look at just the standard condo market, we've seen a little bit of softening this month, but the average kind of ask to sell ratio has remained the same. So curious to kind of see what's going to happen going forward. But looking at this data, a little bit of softening in the luxury market, but nothing that I would write home about. I think it's pretty. I think the numbers all kind of make sense together.
Yeah, and especially when we're dealing with these bigger prices, it can be easier for the number, like bigger prices and smaller volume. It can be easy for 1 or 2 sales to really swing. Yeah, exactly. And so I'll continue to provide this update, but there is a little bit of softening. But again, yeah, you're totally right. Larger numbers on a smaller scale can sway things back and forth a little bit more, for sure. So a quick rental market update. The rental market has improved drastically, especially over the last 60 days. So I pulled this exact sample size last month as well, and I wanted to keep it standard kind of going forward to give people a really kind of clear and clean expectation of what's going on in the market. So I pulled all of the 1-bedroom plus dens that have rented
in this waterfront community that have a balcony and parking that are over 500 square feet. Okay. And so in May, we saw 101 that had rented with the average rental price of $21.31, and that was up over, I think it was $20.50 in April. Okay. Now, if we look at June, the price it's gone up almost 4% month over month. So now the average price point is $22.12. So we are seeing pretty decent movement when it comes to the rental market. So month over month up by 4%, that's pretty drastic. And days on market is down 19%. So it was taking 21 days on average to get something rented. Now we're down to 17. So I'm starting to see like bidding wars come back. The rental market was suppressed for a very, very, very long time, obviously, but we're really starting to see it come back. And so here's some information that I was able to pull off Broker Bay for you guys just to show. So average price point from April to now has shot up. And then this also shows you actual showing volume. So we're starting to see a lot more showings get booked as well. But I'm just feeling it on my end, like everything that I've put up for rent for our investors has gone like very, very, very quickly with a ton of showings. So
interesting.
Good news for condo investors, not so great news for anybody that's looking to rent. But if you are looking to make a move in the rental market, I would actually suggest probably doing it sooner rather than later, because since prices have been suppressed for so long, I do suspect as things open back up and people want to come back downtown, we're probably going to continue to see this trend. So if you are looking to make a move in the rental market, it's probably wise to do it maybe sooner rather than later to lock in the lowest price possible.
Gotcha. Yeah. And also could make sense that as we continue to see showings increase, that's probably a front runner of where prices are headed if we continue to see that trend up.
Of course. I mean, I think a lot of investors did shy away from wanting to buy condos. I've definitely seen my volume of business. We had a lot of investors pre-COVID, and then a lot of them fell off and said, we feel that this market is maybe, they're the people who were super, super aggressive and said, like, this is a great area of opportunity, to which I agree, obviously. But we have also seen a lot of people fall off. And I think once investors start to realize, okay, like rental prices are back on the rise, there's some more activity, maybe we should reconsider this market and re-enter the market before it goes crazy. But this is usually a fairly good lead indicator of what can happen with pricing. So I agree with you on that. And then, so what do I think are the best areas of opportunity right now for summer? So in my opinion, there are 3 amazing areas of opportunity for summer 2021 in Toronto real estate. So that will be for those who are looking to upsize from a condo to freehold property, first-time condo buyers who are looking to enter the market, and then those who are just looking in general for a more comfortable buying experience. So if that's you, continue to watch, and I'm going to explain why. So what we see here is a graph showing overall prices, and this is for the last 5 years or so, okay? And this is freehold prices in the thousands and condo prices in the thousands on a month-over-month perspective. What we usually see here is in the summer a bit of a pullback in terms of pricing, okay? For freeholds, more so than condos. Here we usually see it it's fairly flat. There have been a couple years that have come down, but it is fairly flat for the most part if we look at the 2 graphs in comparison. Okay, so there is an argument to say if you are looking to upsize, it is better to upsize in a down market than it is an up market. So I want to show, for example, this is just generic, but I'm going to show after this slide what's actually happening with our statistics today. So if we're looking to upsize in a down market, what I often hear is, hey, I want to sell my condo and I want to move. I've got a ton of equity in it, but I want to wait for the market to heat up so I can make a little bit more money on my condo. Okay. Now, if we're looking at this from a bird's eye view and you go, okay, cool, I have a $600,000 condo to sell. And in a down market, I'm going to lose 5%. So this sounds terrible. I don't want to lose any money on my condo. This sounds like a brutal idea. Why would I choose to do that? Right? So if you sold at a 5% loss on your condo, that would equate to a $30,000 loss on the sale, right?
Yeah.
But if we could actually go and trade up and we got the same discount of 5% on the purchase price of a $1.2 million semi, then the spread on that would be a discount of $60,000. So you would actually be net positive on that trade of $30,000, even though you took a bit of a haircut on your condo because the trade up was larger, right? So if we look at what I often hear most people say is like, hey, I want to sell and buy in a bull market. But we look at the exact same scenario. So you sell at a gain of 5%. So you make an extra $30K on the condo sale, but you end up paying an extra 5% of a premium on the $1.2 million semi. You're actually net negative on the trade by $30K because you're paying more of a spread on the way up.
Yeah, really appreciate you breaking it down. And again, I think oftentimes when emotions come into play, people get blinded by basic math. So breaking it out like this is useful because I think, unfortunately, most people just focus on what happens on the sell side of this equation, and they forget about the buy side. And there's like, I wanted to set a new all-time high in my neighborhood. I want to sell my condo for more than any other condo sold in my building.
Totally. And so I think to that point, though, if we look at all of the data that we've already talked about so far, Matt, and what's actually happened this month, I actually just did a scenario on what it would look like actually, whatever your trade scenario would be given the most recent market data. So right now condos are flat. Like we saw that, it was 0% month. So that means you don't take, sure, maybe you're not getting a drastic premium and you really wanted that at the beginning of the year when we were in a massive bull market. But condos are flat. So we'll just say that you just sell for what it's worth. But we saw that semis are actually down 4.5%. So if you're thinking about selling your condo and making a trade to a freehold property, now is a very good opportunity because you would actually be net positive on this trade almost twice as much as what you would be in this scenario. Right? So this is based on the data that was most recently released. So that's why I do think there is a very good opportunity if you are looking to upsize. The data right now supports making that decision, but checking your emotions at the door and saying, I'm not going to get some insane price for my condo, but I might get a good discount on what I'm looking to buy, and that will give me a net positive result at the end of the day.
Yeah, focusing on that net result is key in this scenario. And yeah, really appreciate you breaking it down because I think it can be easy sometimes to go through these numbers, go through the analysis month by month, and then sometimes people are left with, so what? Well, I think this is a perfect so what to why paying attention to the data is so important.
So we have a ton of clients that are looking at this type of scenario right now because we've dealt with so many condo buyers over the last couple of years, and they're saying, hey, look, like the market has had a very good run up over the last, since 2016 kind of thing. And we have enough equity now where we can get into that minimum 20% down payment threshold to go over $1 million. And so we're finding a lot of people making these trades in the summer, especially as we know that we're probably heading into, potentially an even further discount, right? I don't know. We'll have to see kind of what happens. We don't control the market, but looking at this historical data, if we're going to make a bit of a spread, it does make sense. And then again, going to my earlier point in the video, we usually do see a bit of an uptick in pricing come fall market. And then usually again, we see a little bit of a drop in December. Now you're going to see more inventory typically in this range. You're going to see less inventory here and less inventory here. So you're going to have less to choose from. Right? You're not going to have as many options. Here you're going to have more options to choose from, but you're probably going to pay a little bit of a higher price. But if you are looking to do this and you're looking to upsize, and you're planning on doing that in the next 8 months, it might be worth considering doing sooner rather than later.
Yeah, really appreciate the breakdown, Emma.
Yeah, for sure. And then just kind of like my last thing, if anybody is again, like I had said earlier, I always hear from people, I want to wait till the market cools down, right? I want to wait until I don't have to compete with people. I want a more comfortable buying experience. I'm scared of putting in an offer with no financing condition. I want to be able to do my own home inspection. I don't want to take the seller's home inspection. That's what we're seeing right now. So if you want a more comfortable buying experience and you don't want to compete in a bidding war, you want to have conditional offers, and you want to be able to have a little bit more time to make an informed decision, and that's the type of buyer that you are, this is the market. Like, we're in that market right now. So if we can continue to wait, and we'll, I'm sure at some point in time, again, in the future, we're going to see that. But if you're thinking about making a move and you want that kind of experience, that is literally the environment that we're in right now. So if anybody's watching this video and you're thinking I might move in like the next 6 to 8 months again, at least start the research phase now to make an informed decision. Especially
understanding the fact that it seems like for the foreseeable future, inventory is going to continue to stay tight. So even as we see potentially softening in the market, there's still going to be a relative amount of competition for the existing inventory. So I think just making sure that you're starting to, line everything up, cross your T's, dot your I's, so that you can present the best offer possible is just key still, even in a market where maybe it's a bit less competitive than it was at the start of the year.
Yep, absolutely. So that's all I've got for you guys today. If anybody wants to get a hold of me, here are the best ways to connect with me. And as always, Matt, I very much appreciate you having me on.
Yeah, really appreciate it, Emma. You're always just a wealth of knowledge, and really encourage anyone that's watching this video, reach out to Emma. We'll have links in the video description down below. So encourage you, reach out, start the conversation early so that you can really position yourself well when the time is right, that you can pull the trigger, move fast, get the right property for you. And as always, it's just so important to have someone on your power team that's also a local expert, right? Emma talks the talk, walks the walk. She's an actual investor herself, constantly dealing with investors, and that really is what separates it. I see so many investors set themselves up for failure, unfortunately, because they decide to use their brother-in-law or sister-in-law who maybe has good intentions, but not necessarily a lot of experience. And as an investor, building out that power team is absolutely key. So really appreciate you just breaking down for everyone what's going on in the Toronto real estate market, Emma.
Awesome. Thanks, Matt.